what can buyers and sellers do today to help offset these high interest rates? I mean, what are some creative ways that buyers, for example, can go into a home and be able to say, okay, I can afford this particular property?
Yeah. So there's a couple things that come to mind when you ask me about ways that buyers can, still find advantages in this market. I mean, there's really not too much we can do about rates. The interest rates are going up. The Fed's increasing interest rates. So there's not too much. But one thing that I've seen a lot of people try doing is what we call is a 2-1 temporary buy down, where they're asking as part of like a seller credit for the seller to buy down the rate of their mortgage temporarily by 2% for the first year and 1% for the second year. It's a cool program that we do with Waterstone. Other mortgage companies can do it too. It's you're not limited to just us, but it's a good way to kind of just incrementally get adjusted to the monthly payment. Where for the first year it might lower it by a couple $100. The second year it lowers it by half that, and then it'll go back to the full mortgage payment for the third year. And it's a good way to get adjusted to the payment. It's a good way to mitigate the high interest rates right now, and hopefully after 2 years, I'd love to say that interest rates will come back down and you can refinance into something better. At least this way, if you're buying a house right now, 2023, in 2023, 2024, your monthly mortgage payment isn't going to be nearly as bad.
Can you give us an example on how a 2-1 buy down works? So we understand that, so a buyer goes in, makes an offer on a property and requests a seller to pay down the interest rate for 2 years.
Yeah.
And then in the third year and beyond, it goes to the original interest rate that was agreed to in the loan, right?
So let's kind of think of it this way. Now, don't check my math on this because I know this isn't right. But let's just say your interest rate is 7% and your monthly mortgage payment is $700. Obviously, those aren't real numbers. What the 2-1 buy down would do is you would ask the seller to give you a credit for the 2-1 buy down, and what it would do is your interest rate would be for the first year down to 5%. And you'd be safe, and your monthly mortgage payment would be $500. The seller would pay then a credit of $200 for 12 months, so $2,400 for the first year. And then the second year, your rate would be brought down to 6%, and your monthly payment would be $600. And they would be paying, the seller would be giving a credit of $100 per month for that 12 months. So then another $1,200. So then what you'd be asking for is a $3,600 credit for a 2-1 temporary buy down. Of course, those numbers aren't exact, but that's kind of how it would work for that.
All right, great.